All right, we're back on the bell. As you can see there, we're down about 400 points, approaching the session lows. Now, the tech trade is front and center yet again today as the chip stocks show new signs of weakness. Here to discuss what's next for tech and beyond is 314 Research co-founder Warren Pies. Warren, this has been again, the central focal point of the trade in technology, semiconductors specifically. Has enough value been erased from the recent highs to make this a more attractive place that people actually want to nibble at right now?
Yeah, thanks for having me. I mean, you never know if this is like the bottom, especially with the news coming out of the K3 model coming out of China. But I think when you zoom out that, yes, we've had a nice rotation and a nice reset from the momentum trade that really carried us prior to July. And that momentum has become synonymous with semis and with hardware. And so semis and hardware are down along with the momentum factor for the first half of July. I mean, our base case is that that probably lasts for another couple of weeks or so. But when you zoom out, yeah, I think this will be perceived as a good buying opportunity.
All right, so that's playing out somewhat today. If you look at the Round Hill Memory ETF, ticker DRAM, DRAM started off the day sharply lower and is now still up about 1.75% in trading today. People did buy the dip. The question is, was it short covering? Was it some fundamental value pickers? It's probably a mix of both. But does this then mean that people are still in this kind of muscle memory buy dip mentality for chip stocks in particular?
Yeah, I think that, yes, probably, but we need more than one day. It's encouraging to see a reversal like this. I think that the release of the open source model, the latest open source model out of China, K3, is really what roiled the markets this morning. And so when I look at that, when our team looks at that, we see that it's really potentially, and we need to test this model and run it through our own internal benchmarking to know what we're dealing with. But if the reports are correct, then it's really negative for the frontier labs, for the frontier models here in America. And then the counterparties to those labs, or the hyperscalers farther down the chain, are semis and hardware. So it kind of makes sense. You know, first this morning was a sell everything kind of wave. And it makes sense to see semis and some of these memory names come back later in the day. They have been beat up a little bit. I worry when it comes to the index level, if the weakness is now just going to rotate over to the hyperscalers. And that's why I say we need more than one day. We need to see if this isn't just a rotation, because there's been such a strong push and pull between semis and hardware and into hyperscalers. You sell those and buy the hyperscalers. Are we just unwinding that a bit with this negative news from this model out of China? You need more than one day to determine that. But all things equal, I like seeing these memory stocks start to rebound late in the day.
The recent version 1 of the tech pairs trade was, over the course of the past couple of years, sell software stocks to buy chip stocks. Now it's flipped around to the sell hyperscalers to buy the chip stocks, because the hyperscalers' free cash flow is going to float from themselves over to the chip companies. How much do you look at this particular moment versus the DeepSeek moment and say to yourself, the bounce back we saw on some chip names, some of the producers that weren't named NVIDIA, actually caught a bid because of that during the last time we saw this happen? Is something similar going to play out now, or is the market in semis structurally different to what it was during the first DeepSeek moment?
Our base case is that we will follow a DeepSeek-like path out of this. That is the base case. Again, I think that we're going to have to test the model, and I think also we want to watch our real-time indicators. So we track GPU availability. Following DeepSeek, for instance, our GPU availability data at 314, it plunged, and it gave us a lot of conviction to step in and buy that dip. And our base case, even though GPU availability has been low, is that it's going to go lower after this model release as everybody scrambles to test it. The other thing you want to see is GPU rental rates. How do they react? And so our base case is that they'll be robust and strong as they've been this year. And if that happens, I think that's a really good sign for semis and for hardware and for the entire overall ecosystem, maybe excluding the labs again. But even with the labs, I don't know that it's a disaster yet for them until we test the model. So I do expect a DeepSeek type of move. For here and now, though, you have like all those positioning things we just talked about that have to get worked out by the market. And that's why I think you have to zoom out to see this as a buying opportunity.